U.S. stocks have been flying, but don't forget about emerging market stocks, says my next guest, Michael Reynal. Welcome, Michael.
Thanks, Greg.
All right, tell me, if U.S. stocks are doing so well, why do I want to get back into China and Brazil when those stocks have really foundered over the past year?
Well, three reasons. Growth. You have superior growth in emerging markets from demographics, and just generally these economies are benefiting from globalization and outsourcing. Number two, value. These markets are very, very cheap, and the stocks are extraordinarily cheap relative to historical terms. And three, inefficiencies. Emerging markets are rife with market inefficiencies. Here in the US, our companies are so well covered, we know all about them. If we have problems forecasting the earnings of a company like Apple or Ford, can you imagine what it's like for a mid-cap in China or a small bank in Turkey? So there are a lot of inefficiencies that you can capture in emerging markets and make real money there.
All right, can you make real money in Taiwan Semiconductor? This is a stock you like.
Absolutely. Taiwan Semiconductor is the largest, most efficient, best semiconductor manufacturer in the world today. They've managed to gain market share at the expense of their competitors all over the world, not just in Taiwan, but in China and here in the US. They're a leading chip maker, and they're one of the best in the industry today.
You're also a fan of Cemex. This is ticker CX, based in Mexico. They make cement. President Obama recently went down to Mexico. Why should people follow him down there and buy Cemex?
Yep. Well, I first met Cemex nearly 20 years ago in Monterrey, Mexico. They were a small regional player. They're now the second or third largest cement manufacturer in the world. They went through a very rough patch, had a tough time with debt, but they're now back in the saddle. They're selling cement into not just Mexico, but globally, and most importantly these days, into the US housing recovery and road and infrastructure recovery. They're doing great.
And then finally, you're a fan of Eurasia Drilling, which is to a certain extent the Halliburton of Russia. They supply drilling equipment to a lot of Rosneft and Gazprom and a lot of the big drillers over there. A lot of people don't like investing in Russian stocks. A lot of people don't like investing in oil stocks. Why do you want to invest in the two?
That's exactly why you have to look at this, Greg. So if you hate Russia and you hate oil, what better combination than Russian oil? Actually, instead of buying gold in San Francisco in the 1840s, you're buying the shovel manufacturer. These guys provide drilling services to the Russian oil industry. Why is this important? Because the Russian oil industry is being forced to explore and spend inordinate amounts of capex on exploration and development, a lot of which is done for fiscal reasons or social reasons. It's Putin's way of keeping jobs going. So Eurasia Drilling is the leading provider of services in this industry. They're doing very, very well.
All right, thanks a lot, Michael.
Thank you, Greg. Thanks for your time.
And thank you for watching The Street.